Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. Today, I'm going to provide an update on my Robinhood portfolio. Currently, I'm at $353,368. Cash position of $46,100. I also have another $30,000 in a high yield savings account, so I can easily deploy into the market when there are opportunities to buy. Most of my portfolio is in US equities, and the market has been extremely optimistic, even with all the uncertainty. Taking a look at my portfolio, scrolling down a bit, my largest position is VOO, Vanguard S&P 500 ETF. This tracks 500 largest US companies, and I figure if I can't beat the market, might as well have a position in it. This makes up 16% of my portfolio, or $49,663, up 26%. So this is fairly low expense ratio and pretty high liquidity, which is great for an ETF. VGT, Vanguard Information Technology ETF, which tracks the technology sector. This makes up 6.93% portfolio, or $21,306, up 132% on this position. Next is Schwab Large Cap ETF, very similar to VOO. This makes up 4.43% portfolio, or $13,600, up 42.82%. So I have both Schwab Large Cap ETF as well as Vanguard ETF, because when I first opened my portfolio, I had both ETFs, and I had many other ETFs, but I've been consolidating recently, and that's why I still have ETFs in my portfolio. My biggest stock position is Apple, and majority of the revenue is iPhones, and they recently reported earnings saying that they did very well in terms of services, as well as Mac computers. This makes up 8.3% portfolio, or $25,517, up 186%. And they also pay a very solid dividend yield, and they continue to increase that. So it's great to see a dividend growth stock like Apple. Nvidia, which makes GPU chips and has the need for graphics processing units are increasing. Nvidia benefits from that. This makes up 6.47% of portfolio, or $19,872, up 194% on this position. Next is Alibaba, which is big in e-commerce and web services in Asia Pacific. This makes up 5.62% portfolio, or $17,278, up 77% on this position. Next is Microsoft, which is big in enterprise solutions and cloud, so including Office Suite, as well as Microsoft Azure and Xbox gaming. This makes up 5.08% portfolio, or $15,624, up 146% on this position. Next is Amazon, which is big in e-commerce and web services in the US market, North American region, 4.71%, or makes up 4.71% portfolio, or $14,485, up 131%. And I've been steadily adding $300 in Amazon every week. Currently have 1,500 invested since October 7th, and price change is up 2.42% ever since October 7th. But overall, I'm up 131% on this position. Next is Tencent, which provides a lot of online services, including social media, financial services, gaming. This makes up 4.14% portfolio, or $12,733, up 75% on this position. I continue to add $100 per share, or $100 in equity every week, and I've done that for the past 5 weeks. This is up 13% ever since October 7th. But overall, I'm up 75%. Next is Alphabet Class A shares. Majority of the revenue is in online advertisements, and with the recent earnings report, they did very well. It's taking back off in terms of companies wanting to advertise more. This makes up 2.29% portfolio, or $7,035, up 71% on this position. Class C shares, which does not have voting rights, makes up 1.72% portfolio, or $5,281, up 76% on this position. Next is Visa, which is big in payment processing. This makes up 3.89% portfolio, or $11,947, up 72% on this position. And I've been adding $100 every week, and been doing it for the past 3 weeks, since October 21st, and I'm down 2.34% ever since I started making a recurring purchase. But overall, I'm up 72% on this position. Next is Facebook, which is big in online advertisements and communication. This makes up 3.32% portfolio, or $10,215, up 68% on this position. Now, I've also been adding $100 per week for the past 4 weeks. You can see $400 ever since October 14th, and I'm up 5.47% ever since I started making a recurring purchase. Overall, I'm up 68% on this position. Next is Johnson & Johnson, which is big in the healthcare space, including medical devices, consumer products, and pharmaceuticals. This makes up 62% portfolio, or $8,061, up 7.3%. And Johnson & Johnson pays a steady dividend yield at 2.83%, so it's a pretty good dividend stock. Next is United Health, currently up 10.33% today. Makes up 2.19% portfolio, or $6,723. I'm up 104% on this position. Next is McDonald's, which is one of the biggest restaurant chains internationally. Makes up 2.11%, or $6,488. I'm up 34.5% on this position. Next is Home Depot, which is big in home improvement space. Makes up 1.66% portfolio, or $5,088. I'm up 86% on this position. Next is Costco, which is big in warehouse retail, and majority of the revenue is from their sales as well as membership service. Makes up 1.59% portfolio, or $4,890. I'm up 56% on this position. They also pay a pretty good dividend yield at 0.75%. Next is AT&T, which is one of the big telecoms. Makes up 1.57% portfolio, or $4,834, down 21% on this position. So even though I'm down, I plan to continue holding, and I might average down onto this position. They also pay a steady dividend yield of 7.61%, so it's good to have that dividend yield. Capital appreciation isn't that big, but their dividend yield is solid. Next is PayPal. Makes up 1.52% portfolio, or $4,684, up 155% on this position. And their services include Venmo, Braintree, PayPal, Zoom, Paydiant, so different financial services online, and they've been benefiting from recent circumstance of going contactless and online, so PayPal has been benefiting from all those online transactions. Boeing, which is big in aerospace and defense. This makes up 1.48% portfolio, or $4,560, down 32%. And even though I'm down, I plan to continue holding this position. Don't plan on selling, but I think it'll pick up in the long run. But it'll take some time to get back to new normal. Next is Bowsen, which is kind of like the Shopify of China. This makes up 1.34% portfolio, or $4,132, up 11.88% on this position. Brookshire Hathaway makes up 1.21% portfolio, or $3,723, up 11.85%. This is Warren Buffett's company, and they own a lot of companies like or stake in Apple, as well as some financial companies, and partially own some other companies. 3M, which is a good dividend stock, makes up 1.04% portfolio, or $3,203, down 17.5%. So even though I'm down on this position, I plan to continue holding, collect its dividends at 3.59%. Capital appreciation isn't much, but dividend yield is pretty solid. Next is PepsiCo, which makes up 1.03% portfolio, or $3,107. I'm up 16.25%, and I plan to continue holding long run because it's solid dividend stock. Next are energy, makes up 0.87% portfolio or $2,660, up 68% on this position. And next are energy has been doing very well the past couple years, so it's a great dividend stock. Taiwan Semiconductor Manufacturing Company makes up 0.91% portfolio or $2,783. I'm up almost 100% on this position. And as semiconductors and chips continue to increase in demand, TSM will continue to benefit. So after TSM, let's take a look. TSM, there's Cisco. So this is a networking communications company. Makes up 0.64% portfolio or $1,971, down 13% on this position. Plan to continue holding long run because Cisco is a pretty staple networking solutions company, and I think it'll continue to be around in the long run. Activision Blizzard, one of the largest gaming producers, makes up 0.62% portfolio or $1,908, up 20% on this position. And you can see this past year, it definitely recovered from the low of March 2019. So great to see that recovery. Disney, which is big in entertainment and parks. And during these times when parks are not open, they definitely take a hit. But I think Disney Plus will help with their growth as their subscribers grow and they continue to push out more content on Disney Plus. Disney will have that upside. This makes up 0.61% portfolio or $1,875. I'm up 22% on this position. Next is Baidu, which is very similar to the Google of China. Makes up 0.5% portfolio or $1,546, down 23% on this position. Next is the Trade Desk, which is big in programmatic advertising. Very different from Google and Facebook. This makes up 0.41% portfolio or $1,270. I'm up 118% on this position. Next is Constellation Brands, which is big in beer, wine, and spirits. Makes up 0.18% portfolio or $542, down 18% on this position. Next is iQIYI, which is kind of like the Netflix of China streaming service. Makes up 0.17% portfolio or $526. I'm up 13% or down 13% on this position. And you can see past year, it's been recovering. Past 5 years, it's still far from its peak, but it's been recovering steadily. Next couple ones are ETFs. Vanguard Mega Cap Value ETF makes up 0.56% portfolio or $1,713. I'm up 17% on this position. Next is Vanguard Consumer Discretionary ETF. Makes up 0.87% portfolio or $2,666, up 96% on this position. Vanguard Healthcare ETF makes up 0.63% portfolio or $1,921, up 65% on this position. Last but not least is Vanguard Industrials ETF. This makes up 0.44% portfolio or $1,351, up 23% on this position. So that's all my Robinhood portfolio. I plan to continue holding these stocks and ETFs and buying more stocks, preferably a good balance between dividend-paying stocks and growth stocks. Also plan on increasing my cash position, currently at $46,100, and another $30,000 in a high-yield savings account so I can easily buy when there are opportunities to buy. That's all for this video. What are you buying right now? Comment down below. Remember to use my referral links below. Both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.